Lakshmi, hi, good morning. Good to have you on the show. What's been fueling this high banking liquidity? Worth nearly, I assume, almost 7.5 lakh crore rupees?
Hi, good morning. Yes, this system liquidity, which is the total banking liquidity plus the government cash balances, has been lingering around for some time. A lot of things, aiding this. Firstly, expenditure to the extent that it has to happen in corporate India is not happening. So that surplus is there. We all know how the aggregate credit demand in the system is. There is FX activity which is happening from the central banker and the normalization process is of liquidity is slightly more gradual in nature, and therefore all of that put together has resulted into the current liquidity lingering on for some more time.
Lakshmi, but call money rates are at 3.25% approximately. They've gone lower than the reverse repo rate. Is such high liquidity sustainable given that we're also staring at a high inflationary environment?
The high liquidity calls for a graded normalization, which is what we saw in the policy that just went by. So we have seen the current 2 lakh crore of VRRR, which is the variable rate reverse repo. We have seen an add-on to that, another 2 lakh crores, which will phase out over the next, which will actually culminate over the next 4 weeks. And probably in the upcoming policy due in October, there could be some more measures. I think there is this uncertainty or the fluid situation around the pandemic monsoons as we speak right now. While it's overall not impacting sowing, but it's about 8% below normal. So there are
Okay. Okay. I think we seem to have snapped Lakshmi's line, but yeah, the idea really is to talk about the high liquidity in the system. We have inflationary expectations. We saw the bond yields hit 6.25%, highest since roughly mid-March. I would have loved to get in a word on that as well, but I think we'll leave it at that. Thanks so much, Lakshmi, for joining us.